In our previous lecture, we discussed about the internal reorganization. Now, let's look into the disclosures, a sample disclosures under the requirement of the IFRS 8. So I'll just read out the disclosure. As a result of the acquisition of Sumex Limited during the year 2017, the group has changed its internal organization and its composition of the reportable segments. Accordingly, the group has restated the operating segment information for the year ended 31st December 2016. So we need to disclose this in the financial notes, basically in the notes to the financial statement. Let's move into the further requirements under the paragraph 32, note number 11 of the IFRS 8. IFRS 8's paragraph 22 just simply requires what's the stream of revenue or what's the various product and service that is provided by the entity. Now we are not talking about any specific segment. We are going forward towards the entity level disclosures. So this is not a segment level disclosure. This is entity level disclosures. We have already disclosed the segment level disclosures in paragraph number 22, the type of products and services from which each reportable segment derives its revenue. Now a time for the entity as a whole. So let's discuss how 8.32 will look like. Revenue from the external customers come from the sale of furniture on a wholesale and retail basis, from the provision of IT consulting services, and from the sale of electrical equipments. The revenue from the wholesale and furniture relates to the company's own brand, Pina Colada Furnitures. The retail provides, there are many different major brands. So this is a basic disclosure requirement under IFRS 8 in respect of 8.32. Now 8.33 has its own characteristics. Now it comes to the picture that we need to disclose about the geographical information regarding where the entity is doing business. So I just want to reiterate one key point is that the geographical information provides the analyst or provides the stakeholder to gauge the economic risks in which the entity is exposed to. For example, I'm doing business in India and I'm also doing substantial amount of business in Middle East, which is related to the oil. So I would be able to explain that I may face a very severe political risks because of any unusual or any uncertain event happen in the Middle East. So I would be able to understand the economic risks of the entity, and which is one of the most core objective of IFRS 8. So if we are going out of discussion, this geographical information has a lot of things to be done, and a lot of things we can understand about the business from the geographical information. Now, let's move into the disclosures. Under the disclosures, we need to disclose the revenue from the external customers, the where the entity is domiciled, or the revenue from the country from which the entity is domiciled. So basically, I just provided a note that the country of legal or permanent address or a registered address, we can call it as a country of domicile. Now, the third point is which is applicable for which deals with any foreign sale. So the one catch is here is that we need to collate or we need to provide a single disclosure for all the revenue that has been generated from foreign countries. But if any country is providing a material revenue, then in such a case, such entities or such countries disclosure requirement is separate. So which means we need to separately disclose for the country, individual foreign country which provides material revenue to the entity. The same we need to do for the assets as well. So they talk about two items only, the revenue and the assets. Where are the assets and how the bifurcation is done? Now let's look into the checklist. Sorry, now let's look into the disclosure requirement. So this is for the revenue. The revenue is coming up, the entity is domiciled in one land, and its revenue from external customer broken down into the customer based on the graphs below. So the other countries are quite substantial, and US and China, because they are material customers for the entity, customers in the sense major of the revenue are generating from US and China, then we need to disclose for this. And the same disclosure we need to provide for the prior period. And these are for the non-current assets. So just remember that the non-current asset for this segment reporting excludes financial instruments, any kind of a defined benefit assets, and deferred taxes. So for the one land, this is the country in which the entity is domiciled. These are two material places where the assets are there, and other countries. One more thing the entity is required to disclose and how they are able to allocate between these geographically. So which means for revenue, the location of the customer is a key factor, and for the assets, the location of the assets is the key factor, which is quite a common sense. So, but we need to disclose this as per the IFRS 8. To summarize, the disclosure requirement is for revenue and for the non-current assets, the country in which the entity is operating, that is the country in which the entity is domiciled of, and any material countries, and the cumulate of all other countries for both revenue and revenue and assets.